Yo, so today I'm going to be sharing to anyone who's interested in my trade on GU earlier. I've had a lot of messages like regarding the way I've been trading recently, and I thought I could share a video to help some people out. So basically, we're looking at the 1 hour on GU, and we have been like coming up um to the upside for quite a while. And the first thing that's I've like noticed over the last couple of weeks is that GU isn't exactly showing downside intention, but is showing a cause to the downside. So it's not quite showing where it wants to go with the like price action and showing the impulsivity to the downside, but it is showing that it's positioning liquidity and positioning retail traders to take the wrong side of the markets and to buy. So firstly, looking at this, we've got a trend line going up. Obviously, some people have put in orders, let's say here, and let's say these are like swing position traders. They might have their stop below the low protected. So you might have entered in on this trend line on this retouch after you've had three touches. So you're looking to get into the markets here to continue with the momentum to the upside. So you've got stop losses below here. And if you look, we haven't really continued the impulsivity off of the trend line. We've sort of just fizzled out. And I see this as like an accumulation phase. Inside here, you've got the banks buying and selling like multiple times, ranging, stacking their orders, moving their positions into where they need to go for the next move. So what they're doing here is they're building liquidity on obviously both sides of the ranges, and they're also taking their own liquidity. But if you look at the trend line positioning, people are seeing this as a form of support, and this resistance zone underneath is also seen as support. So what this is doing is this is advertising to retail traders or anyone who uses trend lines or support levels that there's a buy opportunity here and that this is a respected level in price. So obviously we know that because banks are obviously big and evil, they're going to take this liquidity. So today, when I loaded up my chart, oh no, that's the monthly. Right. When I loaded up my chart, I said to myself, if I see any positioning of liquidity or intention to the downside, I'm going to try to take continuations in that direction, obviously supporting my higher time frame bias. So when I first got to the charts this morning, I got up, I think it was around 11. So I got here around. So I saw this trend line, obviously people thinking, okay, let's buy off of this, let's buy off this resistance zone. Okay, so price comes up, fizzles, takes this. So people may have had stops on this high for positions. So we've obviously spiked out some people here. So using the volume from that, what we've done is we've moved to the downside, come back up. So then we've mitigated this area with these orders. Oh, wrong tool. Where is it? There we go. We've mitigated this area. So the reason for price to travel higher after mitigating that is that there isn't actual intention to the downside and that we're just going to keep on going up. So if I saw a break above this, these two ideas would have been invalid. So I basically took the other ideas off of that premise that if we traveled higher than that point, we're obviously going to mitigate something that I've missed. So it completely invalidates my idea. So my first trade was we came down here, and as much as this wasn't a break of this structure, I knew that obviously we've just had this move that's broken these levels, and I knew that probably price would continue to mitigate to the downside. So as soon as I saw this break here, I decided to place my order here inside this inside bar, meaning that it didn't break the high or the low of the last candle, which basically means there was a range inside the candle. So orders have been stacked in there, obviously, and orders have been stacked in all of this. So I came onto this, took this trade, that was for 30R, and I placed my targets here because of, I think I was just going for the general sweep of that trend line, knowing that they'd want to take the liquidity. And then because of how liquidity works, as soon as they take this and they've taken everyone's buy stops, they've now got an excess amount of buy orders that they can use. So they buy up the orders after taking out these people's stops to then take anyone out of these positions. And then I said to myself, I'm gonna wait for it to come back up to like what I would call mildly safe areas. Like I was just wanting it to get I wasn't wanting to take any of these orders because I knew that obviously we've taken out quite a lot of liquidity over here. So they're probably just going to buy up positions and take anyone out trying to sell from down here. So I said to myself, if we mitigate, that's the last mitigation of an area. So it's the same premise of this. If we break that, then would be going to the upside, or at least going to the upside for a little while, so it would completely invalidate my idea. So I knew that the last area that I'd be wanting to sell off of would be around here, because we've had a mitigation there, and that's the last point that was unmitigated, because that didn't touch it, that didn't touch it. So I knew that we'd be coming up to this sort of area. So as soon as we got into my area, I placed my order with 2 pip stop. This is 17.75R, and obviously targeting my higher time frame areas was just wanting to see a sweep of the liquidity. But yeah, I mean, hopefully some people took some lessons away from that, or I don't know, saw my first attempt at trying to record a video. But if that helped anyone out, or you've got any critiques, obviously I'm wanting to do this a couple more times, ping me a message. But yeah, cheers.